This morning, President Trump posted on Truth Social, quote, "This is a great time to buy." Of course, in all caps with 3 exclamation points. Then later that afternoon, he announced a 90-day pause on the higher reciprocal tariff rate for countries that did not retaliate with higher tariffs. This news sent the stock market soaring with one of the best days of gains in U.S. stock market history. The S&P 500 skyrocketed 9.27%, which was its biggest one-day gain since 2008. The Dow Jones Industrial Average was up 7.87%, which was its biggest percentage advance since March 2020. The Nasdaq 100 jumped 12%, which was its largest one-day increase since January 2001. It was also the second best day ever. This sent my overall portfolio up 8.5%, which was a $27,000 gain. My dividend growth portfolio, which I update every single month on the channel, was up 6.71% with a $14,700 gain. Now, for those of us who were buying the dip, the big question right now is the buying opportunity over? And while the tariff pause is no doubt a very positive signal for the US stock market, I am a little bit concerned about this buying frenzy. First off, I don't think people actually fully understand what just happened. And I've also seen a lot of sources completely misrepresent what this tariff pause even was. It's important to highlight that there are still tariffs in place, and especially on China. So today I'm going to provide an updated look at the stock market and tariff situation, analyze the risk, and share which stocks I would still be cautious with or avoid altogether. Plus, I'll share a pretty big stock I just sold in my portfolio after big gains and my plan to redeploy that capital. My name is Zach, this is Dividend Data, and you should leave a like and subscribe to the channel if you enjoyed the video. First off, when you're scrolling around on X or any social media platform today, I've noticed a lot of bad reporting on this situation. People have just been posting by itself that Trump issues a 90-day pause on tariffs, which is kind of true, but also not really accurate at all. And I'm a little concerned that that potentially added to this massive upside and buying frenzy we had today. If you actually read President Trump's post on Truth Social where he went over the tariff pause, he mentioned that the 10% base minimum tariff will still be in effect, and they are already collecting money on that. Trump has said that the new tariffs are already generating over $2 billion a day in revenue for the U.S. government. And this 10% tariff is staying in place. The pause is on the higher reciprocal tariff rate that they brought out and showed on all those charts. And this 10% baseline tariff is still going to be here. And my read on the situation is that that baseline will likely stay because they've been talking about this for a long time. They kind of view it as a fee for accessing the US market. But then the other big part of the news that people seem to have completely forgotten about is that the number one trading partner with the US, China, is still escalating in tension around trade, and the US just increased tariffs again to 125%. Following retaliation from the Chinese. So the tariff situation is definitely not over. This is still ongoing. And the 90-day pause is creating an opportunity for all of these countries to make trade deals with the US. So if you were someone who was looking at the stock market going up and you saw the news of a pause and you were like, oh yeah, the tariff situation's over, time to put all my money in the market, I'm sorry to tell you, we'll probably have a lot more volatility over the coming weeks and months. And there still will be real companies impacted from this news. As an example, we have Apple, who manufactures most of their products in China and has not yet been given any kind of exemption. There is still a lot of uncertainty around that name. But after this news, the stock soared 15.3%. And I'll give my analysis on that in a second. But when it comes to China, there actually is some more positive news as well. For example, Trump said today he does not anticipate needing to raise tariffs anymore beyond this already highly elevated 125% level. He also has said many times that he thinks China will want to make a deal. They're just trying to figure out how to rationalize and come to the table, which makes sense. They're a very prideful country. But in terms of leverage, it's really all towards the United States right now. But even if in a few months we get to some new trade deal with China, we still live in a completely new world since last week when the tariff policy was announced. And any company who's manufacturing their products in China is going to be in a worse position now than they were previously. And that brings us back to Apple's stock. I asked my AI analyst over on dividenddata.com about Apple's manufacturing presence in China. And according to online sources, approximately 90% of their iPhone production is still in China. and the majority of all their other products are still manufactured in China as well. However, over the past decade, they have made significant efforts in trying to diversify that supply chain. For example, Vietnam and India are becoming big hubs for Apple, but no matter what way you cut this up, the tariffs are going to have a big impact on Apple if there is no exemption. So I find this 15% increase to be a little puzzling. So I'll give you kind of the bull and bear case for the tariff situation around Apple right now. The bull case is that there is now a pause on the higher tariff rate other than China. So that means Vietnam and India are only going to be at the new 10% rate rather than 34 to I think 46% or something like that. So that's a positive thing. The other positive thing is that we're working towards actual trade deals rather than escalating tariffs. And now that there has been a pause in place, there is hope around Apple stock that somehow they get a pause individually on them or possibly an exemption altogether. However, I am not necessarily sure that's going to happen, as there's really no evidence of it so far, other than the fact that Trump put an exemption on Apple in the first Trump term when he put tariffs on China. And when you start to think about how this would impact Apple's business, the results are not good. They are probably the number one company impacted in terms of dollar amount. This is going to increase their manufacturing cost, which will put pressure on Apple's margin. They're either going to have to pass that along to consumers or find a way to absorb that cost throughout the supply chain. And if they do start to onshore more manufacturing to countries like the United States, that will likely be a more expensive product as well. So I see it unlikely that Apple's profitability and financial situation will be as good as it is right now a year from now, assuming these tariff policies remain in place. So when we go and look at Apple's stock and you see the big rally they had in stock price, I personally think that it makes pretty much no sense that it's basically the same exact price right now that it was when the tariffs were announced. And if we just go and take a step back in time, and you told people that there was going to be a 125% tariff on China, which was raised in escalation from a 54% tariff, and we would have a 10% global tariff, I guarantee you that nobody thought Apple stock would be trading at basically the same price. Apple is a hardware company with the majority of its revenue and profitability coming from its hardware products, most notably the iPhone. And I really don't see a situation where there is not pressure on Apple's margins. And this is coming from a situation where I considered Apple stock to be the most overvalued of the big tech companies. And the reason why is they traded about 30 times free cash flow over the trailing 12 months, even at today's stock price. And with all this news, I would probably expect their earnings to go down. Plus, Apple has been struggling with growth for years now. The iPhone has plateaued as a business, and the main hope among Apple investors is this growing service pie. That's very high margin software, fees, and subscription products. And I still am bullish on that segment of Apple's business. But the iPhone, which is the cash cow, is basically plateaued. Apple's revenue has not grown in 3 years. Their operating cash flow and free cash flow is basically flat, hovering around $100 to $110 billion, which is great, but that's roughly 30 times in terms of valuation. And it's hard for me to imagine a situation where Apple's free cash flow doesn't go down from here. They will face pressure on margins, and they will likely have to increase capital expenditures in order to move their manufacturing base. All of that will be a short-term hit to Apple. And I definitely think it's far less likely that Apple will continue repurchasing shares at $90 billion a year. This is the main way that Apple has returned capital to shareholders, and it's really been juicing the stock for a number of years. But I think there will be pressure for even that to start slowing down. Now, don't get me wrong, Apple is a fantastic business. I love their products. They are a great, great company. But this is still the most overvalued big tech stock. And I think this 15% increase was based a lot on hope more than the actual reality right now. And if you want to do your own research on Apple and many other companies, I'm using this tool, dividenddata.com. Everything I'm showing today is available there, whether it's the AI Analyst, the stock analysis tool, or my portfolio tracker as well. And let's pivot to my portfolio and what change I just made. So yes, it was a big day of gains, but I do think we may be in for continued volatility. So I wanted to have a little more cash on the sidelines. Don't worry, I'm still significantly long and invested in the market though. But I actually sold my Apple position today. And in terms of this one day in the stock market, I actually timed the sell pretty well. I got it just over $200 a share. This was right before market close. So that's going to result in about $4,000 of capital gains. I've had Apple stock since 2021. And to offset some of those gains, I did a partial sale of my position in the Walt Disney Company. I basically sold all of my bad buys I had where I was buying at like 150 and 130, and that gave me some losses to offset the Apple gain for tax purposes. Now, I have not reflected these yet in my portfolio, but basically this is going to give me about $14,000 more to redeploy and buy different stocks. And I do think it's important to say I am not bearish on the overall market. I actually think there are a lot of attractive opportunities right now. I'm just repositioning my portfolio a little bit away from things that I think are more high risk right now. And in terms of opportunity cost, I'm likely to redeploy that capital towards Alphabet. I'm going to be building this into a core position of mine up with Microsoft and Visa. I'm also looking at an energy stock, MLPX. I've covered them a few times on the channel, so I'll likely open a position in that as well. And this is just a personal decision of mine trying to optimize my portfolio. I don't think Apple's a bad business. If you own it and want to keep owning it, that's completely fine. I just think Apple is set to underperform, and I thought this 15% increase was kind of ridiculous. But it is an extremely high quality company that I'm open to starting a position again in the future, depending on the right circumstances though. If you're investing in Apple stock, you have to be praying to get some kind of tariff exemption. If you enjoyed this video, please leave a like and subscribe to the channel for future stock analysis content. And overall, I definitely don't think we're done with market volatility over the next few weeks and months. And I personally think there will be some pretty good opportunities ahead. So if you want to know how to prepare for a stock market sell-off and crash and what kind of mindset you should have and what stocks you should be following, I just made a video called How to Prepare for a Stock Market Crash in 2025. Please go watch that. It will really help with your investing psychology. With that said, thanks for watching and I'll see you in the next one.